Welcome to the Asia Tech Podcast. I'm your host for today, Gustavo Liu, and I'm joined here today by Dmitry Voronenko. Did I pronounce it right, Dmitry?
Absolutely right, yes.
He's the co-founder and CEO for Turnkey Lender, a computer software solution SaaS platform. So welcome, Dmitry.
Yeah, I'm happy to be here.
How are you?
Yeah, fine today. Today is a good day.
How has Singapore been treating you so far?
Yeah, extremely well. I like Singapore.
2 years?
Yeah, more than 2 years already, so I used to it.
Fantastic. So, you're the CEO of Turnkey Lender. Tell us a little bit about how you started and why Turnkey. I see that you come from a software engineering background, right?
Right.
This is quite interesting, sort of coming from the sort of the more technical background, coming over to doing more loans and the financial products.
Right. So it actually, the whole my life I was being in two fields simultaneously, in finances and in software development. I started my career in National Bank during some crazy times of reforms in my country. And that is how I got a lot of experience in banking industry. And then I started a startup that we are doing artificial intelligence software.
Wow.
This is the second my passion. I have a PhD in artificial intelligence, especially in artificial neural networks. So I've done software for neural network-based modeling of Forex, stocks and options trading. So we've done a separate software. We partnered with great companies such as Forex.com, for example, NTD Ameritrade and stuff like that. So after this startup, and during this startup, it was not only software for trading, but also software, general purpose software for different kind of modeling. And we worked actually with Pfizer to invent new drugs, with Boeing satellite system to model some trajectories, and with some great companies, with Stanford University, with many universities, observatories, with Hong Kong police, for example. So we in different areas, because we were focused on modeling. We were extremely well in a certain type, quite complex kind of neural network modeling.
So it wasn't just financial modeling. You were actually it was actually scaling to other forms of
yes, it was. Financial modeling was a separate division inside the company, and the main platform was general purpose artificial neural network based software. And it was not only general type. Those years, the most widely used one was multi-layer perceptron. But it was not only this. We used already constructive neural networks. It's a kind of something a little bit similar to what people use now, what is named convolutional neural networks. But it was those days. And one of application was, of course, to predict probability of default. And for some special cases in the United States, when people, for example, do not have social security number, do not have credit history, we used to help some banking institutions to model. So that is how I got this idea about scoring. And my next company was Scorto. And I spent 10 years there. We've been doing credit risk management solutions for banks. For some of them really large, the largest. So, for example, IFC, we've done a couple of projects with IFC, multinational projects with them, with Daimler Financial Services, with Société Générale, Crédit Agricole, Sumitomo, for example. So, and through all these years, especially closer to the end of these 10 years in this company, I saw this new trend that is coming. And if we can see what happened 12 years ago with e-commerce, I saw this is happening with e-lending. So I saw bankers who leave banks, start new startups, such as Cabbage or Lending Club. And in this previous company, we helped some companies actually to establish such new alternative lending companies, peer-to-peer lenders. And I saw that this is new wave that will change everything. And right now the prediction is that by 2025, 90% of all loans will be online, will be actually originated online. And we are moving to this, and it was evident there that this is a new wave. It was evident this is once in a lifetime opportunity. So being in this industry for so many years, so I started my life with banking. So I was constantly interested in it, because it's actually money. It's like blood of economy, blood of every country.
And it's essentially, I mean, the loan department in every bank, right? That is essentially the one that thrives the most. That's where the money is. It's the mass market, the entire sort of private banking. In many banks around the world, they're kind of suffering because it's very competitive. But the loan department is something that has existed for years and years. And, it's amazing how it has evolved over the past few centuries, to a point where, if we look at the financial crisis, where it caused the entire crash, but then again, you just can't get rid of that department. You need to. That department is so important, because it provides is the backbone of any economy, is to be able to provide loans, right?
Right.
And it was that. Did you start off the company Turnkey Lender with the in the back of your mind that this was going to be a loan sort of SaaS platform, or did it evolve from something? Was this your initial idea?
Yeah, great question. It was initial idea. Actually, I thought a lot about it. An initial idea was to create a company that will be dominant player globally. Since I had this experience in previous company at Scorto, I've been doing this for banks in 34 countries. So I already got this experience, how it is done, how it's to make an abstract metal layer. So it will be easily configurable for different countries, different regulations, different kinds of how they calculate interest rates and stuff like that. And the initial idea was to create a lending platform for actually suitable for global usage. Of course, there are separate editions per country, but a platform as whole. And it was the initial idea. So it is not like at Scorto, we initially created scoring engine, and then it evolved to credit risk management and collection risk management and stuff like that. Here, I already knew the whole story. So the idea was actually to provide end-to-end solution for new kind of lenders, for new startups, or even new digital banking divisions of large banks, to provide end-to-end solutions. Because, as you correctly pointed out, in banks, this loan division, they have separate budget for origination, separate budget for servicing, separate for portfolio management. With new wave of lending companies, they have a lean structure that want to manage it all in a single solution. Plus, with a single solution, you can get seamlessly intelligence, so you can look how person actually fills in the application, with which speed, how they delete it, enter it back, or whatever. Then you can use this information when you calculate behavioral score. Then when you can use this and that information when you calculate collection score or prioritization or self-QS score for delinquent debts. So you having all on the single platform, you actually have it all in your hands, and you can better use artificial intelligence to produce analytics and to help automate bright decisions. So what we also do, our main stuff, not only automation, but we do operational, everyday operational, I would say, micro decisions, not strategic decisions, but operational decisions that are actually in hundreds and thousands every day. We are automating them to get as much as possible. So good people will have lower interest rates, but still these lending institutions have higher profits. And the cost of this technology will be not millions or tens of millions, but will be totally affordable for anybody who actually brave enough to get to the journey.
And Turnkey isn't really a early stage startup, right? Because you've been around since 2015, and right now you are like spread across various countries. Which countries are you right?
So we started from Europe. We even got our first representative office in London, in Oxford, actually, near London. But then this Brexit stuff spoiled all the plans. So the idea was to start in UK and then to go to United States. And then Europe, we also got sales in France, Spain, Sweden, actually in all the major European countries. But then we moved to United States because we got more and more requests there. Because in the United States, it's easier for them to buy remotely. Especially for fintechs, they make decision fast. We have great technology. We give them trial. They try. They like it. So
was it hard to comply to the regulations? Because in the US, the lending side and all of the other sort of regulations, it seems to be a little bit more.
Yeah,
stringent.
especially after this crisis, they got this Dodd-Frank Act, and then, but it's because I already had this experience. I already knew what required, so we initially built it as way. But we had a couple of interesting cases.
Yeah.
Of course, there are different states. They have different kind of regulations. Even, for example, the penalty that can be actually issued to the borrower for not sufficient funds situation. They're different per state, and
the credit system, the building back of your entire sort of personal credit, the company credit. It has is very different compared to like everywhere else, especially here in Asia. In the US, their entire sort of credit assessment system it's very unique to American regulations.
Yeah. So it started with FICO, who started it in already 60 years ago. And then they have these major credit bureaus. Going to United States, we included initially into our solution integration with 6 credit bureaus. So there are 3 major credit bureaus in the United States plus FICO, that is scoring bureau. And we included also alternative ones such as Clarity, Factor Trust. And so for United States, we were prepared because we knew it's very well established market with great infrastructure. So you get this FICO score, you get this credit bureau score, but additionally to it, you get your behavioral score, you get your web score. In some cases, you get your mobile score. So you apply some anti-fraud techniques. So all this together gives another edge to this lender who uses this platform. But you're totally right. It's totally different than actually running lending business in Indonesia, for example, or in India. Or even in Poland. So
and how before we go into your deck, I'm actually interested to know how is the adoption process, especially when you're introducing AI, right? For the banks, I mean, they because of a lot of regulation and a lot of sort of checks, how has the adoption process been for you?
So of course banks, this is different story. In our startup, we do not focus on large banks.
Okay.
So we focus on middle-sized banks rather than small-sized banks.
Okay.
We can and we discuss right now with several large banks, but only if they establish a separate digital lending division with separate budget, separate decision-making process. Because with large banks, I know from my experience, it's 12 months just sales.
It's very hard,
very often you do pilots, and then nothing happened. So we were aware of it. So we started our adoption from those who need it tomorrow.
Which are the startups, right?
Some of the startups, but some also classic companies that decided they need to be present online. For example, a vehicle leasing company, or even a big microfinance operator with many branches across the country, but now they need also to be online. Because, of course, you know perfectly, they now pressed by competition from these fintechs. Even in Indonesia, in Philippines, before you can be on this island and you are actually quasi-monopoly. And right now with all these mobile phones, with web, you cannot be anyhow.
Well, with the introduction of like the smartphone over the past 10 years and the internet, everybody became more accessible. You're no longer bounded by your physical presence where you are.
And that is why even classic institutions, they need digital lending. So what we do actually, we digitize lending.
Absolutely.
And for them, so adoption is easier. Because for them it's like a new division. For bank, I understand. I do not complain. For bank, actually, to make this decision means it's like a large ship needs to actually pivot or do something. They need to think a lot, and they have time to think.
And in the last 5 years, we've actually seen a very large sort of surge of startups that are trying to solve the lending issue, because everybody in different parts of the world, be it in Latin America or Southeast Asia or Europe or US, they're always looking for solutions to try to get more. It's capital management, right? So whether it be a company or a personal level, that lending platform is very important, and we've seen a lot of startups doing that. So is that your primary target right now for customers? These are the ones that you're going after, the startups?
So we have 2 main streams of our customers. First, these are startups or any kind of fintechs, peer-to-peer lender and lenders, alternative lenders. And second one is those who seriously go digital. These are classic lending institutions. And we have already among our customers 4 banks. who actually, but they do it this way. They do it as a separate digital lending division, and we automate lending for them.
Sure. So can we take a look at your deck?
Sure.
And so you were founded since you are now in Belgium, Indonesia, and Philippines.
Yeah, this is where we have our sales offices.
Okay. And but where are your customers, primary customers?
So majority of our customers are in Southeast Asia and United States.
Okay.
Again, historically, we have Europe, and still we are having customers last week from Denmark, for example. So we are having customers from Europe, but we are growing the most extensively in United States and Canada, of course, and the Southeast Asia.
And how do you make money?
Okay, so our business model, we charge some setup fee. For smaller companies, it's rather symbolical, like $3,000-$5,000. And then we charge per active loan per month. So as long as loan is in our system, we charge certain transaction fee per month for every loan that performs. This is very important. We do not charge for non-performing loans, so that we are in the same boat with our customers. So we charge only for loans that bring money to lenders, to our clients.
Awesome. And the AI would essentially, does the AI play any role in terms of determining how you should charge and what?
Yeah, we have two kinds of clients. Some of them, they tell us we know how to score our clients. We have a big history behind us, or we have our own scoring department of bright guys, geeks, or whatever. Yeah. And for them, we have a flexible decision management platform. We plug in the scoring engine, or even several ones, plug in their rules, their decision matrices. Some of them, they are pretty small. They ask us, can you please provide us with scoring? And for some countries like Indonesia, Philippines, United States, we have generic scoring models. And of course, we have rules and how we actually advise to do it. For them, we do it. But some of them, they tell us, we have data. Could you please adjust your models using also our data? For our generic scoring models, depending on country, by regulation, you can use or do not use something. For example, in Philippines, nobody cares about privacy. In United States, they care a lot, and in Indonesia,
in Europe is the GDPR. And
GDPR, we GDPR compliant, and you should be GDPR compliant. And now even a lot of people even here in Singapore, some of them have capital from Western Europe, and they require lending companies where they invest to be GDPR compliant anyway. Right. So this is actually, and everybody, or almost everybody, believes GDPR one way or another it will be actually brought into Southeast Asia sooner or later in one form or another. So it's actually the future for all the other parts of the world.
Right. Has that impacted? Because I'm very interested. With AI, obviously, you would, especially with machine learning, right? You do require a lot of data to be fed into the system in order to get the more accurate sort of outcome for your customers. How has that impacted you with the new regulations being put in place for data collection? Yeah,
we initially built systems that we do not collect personal data. We collect only aggregated sub-segment data. Oh. So we do not do it. And for GDPR, it's actually more on lender level. So within our software, customer can actually request to delete records about him and stuff like that. Of course, for lending, it's more specific based on European regulation, because if you are delinquent, you cannot as easily tell, okay, delete record, everything about me. Yeah. So it's a certain procedures. That is why it's more difficult for lending.
It's that traceability aspect.
And when you can and how you can request. But all these GDPR regulations, we are compliant with them. But it does not affect, because we collect it with in aggregated level. Even in Philippines and Indonesia, we have our own mobile apps for Android and iOS. Mm-hmm. We, as everything else, we white label for our lenders. Yeah. We white label them, and so we collect a lot of big data about location, about SMSs, activity, and stuff like that. But this one, we also actually aggregate by sub-segments, by sub-region, by sub-profession, by sub-age, and we collect it in aggregated form. So we do not actually hold data about certain individuals.
Yeah, and now obviously with the new sort of wave of cloud computing and the lowering cost of all of these data storage, you are able to achieve far more than what you used to be able to do years back in your previous businesses with AI, right?
Yeah, I can even tell you a wonderful story. Actually, we developed. So we have two directions where we use AI. First is scoring, different kinds of, and second is some kind of image recognition. So we developed when we started in United Kingdom, we developed software that actually recognized driver licenses. Yeah, so people will not fill in application form; they just scan it or photo it. And
did you have to build that yourself? Or
yeah,
was it API?
We actually built it ourselves.
Image recognition and financial lending.
Yeah, and this is the story. And then, you know, like it's already a year ago, Google actually was able to do it better than us. In some cases we are better, but we found out, no more reason for us to compete with it. Of course, they will go. So, and up until 1 year ago, we were better because we were focused on certain area. And we've done similar stuff for Philippines, for example, and some other countries too. For United States, you know, you have driver licenses for each state. They have fancy images behind, and so it was a little bit difficult. But now we understood we should not do it anymore because Google now does it the same way as us, and of course they will be better down the road. So we actually started use for this particular case, we started to use them, plus adjust using our knowledge about particularities. But the main stuff is used from them. So this is how everything moves, and actually we'll love it because one of the reasons we are in this business, because we are lowering technological barriers.
Of course, frictions, right?
So instead of spending half a year, 1 year setting the system with us, people can start lending the next day. So in United States, when they have perfect infrastructure, because in Indonesia, for example, in the Philippines, you can spend several weeks just to get credentials from credit bureau, for example. But this is better and better. And we actually watch how we especially astonished to see how it's better in Indonesia and Philippines. So GK becomes marvelous. When we started, we were thinking, but now they are very bright. They got very bright team. They are doing bright decisions, balancing banking lobby, plus bringing better and better technologies to the country. It's a tough way to do, but they are managing it. And Philippines on government level, they promote financial inclusion, promote all different kinds of, to avoid loan sharks actually, to possess big market share, to get more and more market share out of them for lenders who actually use software like ours, who record everything, who have this portfolio report, who has proper scoring, and who has much lower rates.
And does that actually take into account sentiment? Or some changes in the market, like for example, if there's an announcement that is made, would the system be able to capture that and recalibrate and
so we do not have text mining software inside us. So it's not like if something happens, like some disasters that were never predicted, we will not get it. But what we have a very flexible visual tool to change it. So we have a customer who was doing a real estate backed lending in the UK, one of our first customers. And when Brexit happened, actually not everybody expected it, almost nobody expected it. And they've done it the same night. And the next day, they already adjusted the different ratios for real estate industry, construction industry, stuff like that. Because it's very easy. A lot of lending software producers or platform owners, they have it per country and per certain case. For example, only for mortgages or only for this case. And they do not have, like us, very flexible visual tool to adjust rules and change them. This is what we have. Plus, of course, artificial intelligence learns from patterns every time with certain periodicity.
And I also see that you were one of the 20th hottest startup by Singapore's Business Review. How amazing is that? So what are the criteria? Being 20 the hottest startups, has that really helped you to get more customers, or how has that benefited you?
We already quite known here in Singapore, quite known in the region, but of course it's great. So we got another approval of what we are doing.
It's a validation of what you're doing.
But we are quite seen in the industry. We've got our MAS FinTech Award in 2016. And MAS done incredible due diligence, talking to our customers, reviewing our code, actually digging everywhere. And it was tough, but actually we are happy.
But once you get out of it, right, and you've completed the entire process, it actually brings you to a whole new level.
Absolutely.
Has that entire due diligence of MAS Has it made you look at your company in a very different way from what you used to operate in? Has it changed like majorly your business model?
Mainly because since we initially targeted for large market share, for larger players, we were already ISO 2001 certified for quality assurance, 27001 for security. So more or less we've done already the certification processes. But it was a totally different angle.
Right.
So it was a totally different. So it was very big technological one. So for example, when you do due diligence with VC, they do not dig too much into technology. Yeah, they would rather dig into team, into financials, into market fit and stuff like that. While MAS, they've done both. They've done, seen the company is stable, growing and doing business right, plus they've done a very, very good technological assessment. But this helped us because then MAS also invited us, and we are very thankful to this AFIN. This is ASEAN Financial Innovation Network. So this is a big endeavor with IFC and MAS and actually ASEAN Bankers Association to bring the whole platform where from one side banks can plug in and finance companies, and from another side fintechs will plug in. So they will not need to go through long process of due diligence and requirements, and they will have a single API. And so all this level by level we actually proved to the market that we are here seriously, not like solving some tiny problem, but understanding particularities of the market. What also MAS helped us, and we helped MAS because since we are on different markets here, we came to Singapore, we already knowledge of how business is done in States, UK, Europe, Latin America, and here we're also already doing business in Cambodia, Vietnam, Philippines, Indonesia, Malaysia. So, and this knowledge, because it's totally different markets, like
Absolutely.
you can
Imagine Cambodia.
Absolutely, absolutely. And not only by level of development, but even by approaches, to how to do integration, how to deal even with fintech. And all this actually gave us also another strong point because people understand we've been through all this. Whatever you will invent or some particularity you have, or whatever route you will find useful for your lending business in a year, we still passed it. So, for example, so having more than 80 customers across the world, we already passed so many scenarios, and we know how to technologically support lenders to do it right.
And of course, that this entire process is very tedious in the past, where you did everything that's so manual and labor intensive and cost is very expensive process, right? And even with that, you still can get to the ability of using this big data comparison sort of to that level of accuracy which you guys are able to provide. Of all the markets that you've actually tapped on, so you've got Asia, you've got US, you've got Europe, where do you see the next sort of trend of growth for a SaaS platform for lending specifically?
So we are here. This means, this means actually we carefully selected between United States and Singapore, very carefully. And my second co-founder, Elena, she's US citizen, and she spent a lot of time in Silicon Valley. She actually made 2 successful startups there. So initially we thought to go to States. But after we actually visited Singapore and United States, here in Southeast Asia, so let's do not take right now China and India, but here in Southeast Asia, this is where growth lies, where number of unbanked population, actually where a number of banks that still do it in paper or in Excel. It's enormous untapped market, and growth is here, not only immediate growth, but the future growth. And that is why we are here in headquarters here and will stay here.
Well, MAS is definitely very supportive of collaborations and all the sort of regulatory frameworks and everything. Is about, bringing businesses in from overseas, but at the same time bringing local businesses out into other countries, and being part of this wave. For supporting business on the lending platform is fantastic. A lot of the startups that are facing some constraints, especially the ones that are dealing with lending softwares, they do need support to not to reinvent the wheel. So
absolutely,
those are the ones that you and they are the ones that are sort of approaching you guys. And, so I want to talk a little bit about your fundraise.
Yeah.
Because you're doing a fundraise right now.
Right.
And also, are you, obviously every startup is hiring. Are you also hiring?
Yes.
Let's talk a little bit.
Constantly, yeah.
Constantly hiring.
Yes.
As a CEO, they say that you should always be hustling, always be hiring, always go out and look for good talent. So what are the positions that you're looking for, and what sort of criteria and characteristics do you hire for?
Yeah, so right now we are hiring, so we have our R&D office in Ukraine, and mainly we hire technical talent there. Here in Singapore, we are right now hiring business development guys.
Okay.
So business development director, high-level business development managers or sales managers, you can name them this way, and marketing specialists. So this is who we hire here in Singapore.
Mm-hmm. And how do you assess? What do you look for? Is it on a person that you want to hire?
So these are two main categories of criteria. First category is actually more or less personal. Mm-hmm. So what we as a founders, what we look for, we look that first of all we used to tell that we hire only those whom we want to hug. So only those with whom we love to work, and this is first and foremost. But of course, we as seasoned already businessmen, we look that this person will amplify the team.
Yeah.
So and team will amplify the person. So this is the first criteria, more like soft skills or personal.
And on your point of people that want to hug, I always have this thing when I work with other startups. I usually have this rule, right, which is the Chuck test. If I'm walking down the street and you see your friend walking, or you see somebody that you recognize walking on the other way, is that somebody that you would make an effort to cross the street to go and, let's go for a bar, for a beer? Or do you want to walk the other way down or look at the window and pretend that you haven't seen that person?
Yeah,
right?
Wonderful. Absolutely agree.
And if it's somebody that you don't even want to talk to, then you should don't walk, run.
Yes.
And you should get that person out of your life. So it's a wonderful analogy that when you said it's somebody that you want to hug, right? Yeah. And on the skill side, obviously how important is that versus the chemistry, the person?
Yeah, I would say equally important. So we usually, if we see the next important thing is intelligence. Mm-hmm. So if even we are looking for a senior level, but we see a medium level, but we see how a person will grow, we may hire him or her. But this is one exception, especially for startups. Again, this is my fourth company, so different. There is no right question because these are different stages of startup. We already are on a certain stage. We already have 70 people, so it's a little bit different. So initially, you need to hire only those who complementary totally from all the angles. And on the next stage, you need to hire whom you will be able to get work done, or whom you will be able to use, if you name it, immediately. You cannot afford, even if you see a great guy, you cannot afford at this stage of startup even spend 3-4 months trying to teach something. Of course. Whatever great person you will meet. But at a certain level, when you already have your skeleton or you have your key people and you actually put in some sales people, for example, even if you look for senior but you see medium person who will be again in foreseeable future, like several months or 1 year in this. So it paid me back extremely many times when you actually develop your own stuff, not just headhunt from something. Okay. But again, it's only at certain stage at the next stage, because a lot of startups, they hire because they like or because they are sure, and they are definitely sure within certain period of time this guy will be wonderful. But startup cannot afford this. This cannot be done, and that is how we see it right now. But what we see of course responsibility, and of course we ask professional questions. But we usually ask more in terms of situation. So we give person a situation and how would you solve it, and then a lot of questions around it.
Those kind of test cases and the case studies. And obviously it seems from the positions that you are now looking for are mainly the hustlers, right? The ones that are in the marketing side, the business development side. Those that are. Is that because you want to address more on building the demand side? Actually,
we with demand side we have everything perfect. So we have perfect pipeline.
Yeah.
So where we have problem right now is with conversions because of insufficient staff actually doing the sales. Especially right now we're getting more and more high-level sales from relatively large banks, from telcos, from large institutions, and we need more people who are senior level. Who can
Would you say like those are people that are able to open doors and that have the connections with a higher level?
So we do not. Well, of course, every time we need people with great connections and networking, but we more need hunters.
Hunters, yeah.
Yeah, because we are quite known. We have a wonderful pipeline. This is why we're actually crying and thinking all the nights, because we have a wonderful pipeline, and now we are hiring a lot because we need to serve this pipeline. Especially in United States, we are having right now banks. Right now, community banks, regional banks, and large credit unions, but it's impossible to sell. This is also why we are raising capital.
Yeah.
So we have just virtual office there, and we sell remotely. But you can sell to fintechs this way, but you cannot sell to banks. And having such great larger clients and already known brand and known technology, we are mentioned in some reviews of lending software and digitalization, stuff like that. This is what we need and who we need actually to.
So since you mentioned the raise, like how much are you raising and what are the conditions for raising?
Yeah, so we are raising right now 5 million. Our current
and that's Series B, right?
Whatever you name it.
A, B,
so some
C.
of them name it B, some of them A+ or A1. So we don't care how it is named, because some venture companies, they like to name this way, others. So this is the next round. Previous round we raised with Vertex. So Vertex was the only our investor, and for this round they are ready to top up. So up to 2 million, and so we are raising the remaining 3.
Okay, awesome. So they're leading pretty much.
No, but they will not lead.
Okay.
So we are looking for the lead investor.
Did you say they led the previous one?
Yeah, they was the only investor with the previous round. Yeah.
Awesome. And so now you're looking for a lead for the next round, for the remaining 3 million.
Yes.
At what market cap?
Okay, you mean
in terms of like the size of valuation of your company right now?
Okay, it's better. We would rather see the number from VCs.
Okay.
How they evaluate the company. We are open. We are actually reasonable. So let's talk how you evaluate our company.
So you're open for discussion.
Yes, absolutely. Yeah.
It's sometimes good, sometimes very dangerous, because you know how sometimes the investors will go in, and obviously in their interest is they want to get as much of the value from the equity as they can, and from your perspective you would like to get as much of the money for the lesser equity as
that's true. But we also know opposite sides. So again, it's not my first business, not second business. So I know I would rather get an investor with whom I am comfortable and with whom I will grow faster, because wave is going. This is what we need actually to be with this wave, to grab all the opportunity it gives us. We have now opportunities even of quasi monopoly somewhere, but we just need to scale. And I'd better go with this investor even with lower valuation. Yeah. Because it's not about right now and not about this percentage. It's about how fast this company will be a unicorn, but not how much value I will get, because this is value also of invest. Sometimes you have just money, sometimes wise money, sometimes you have money with even a single advice can change company revenue dramatically. So this of course.
Do you have a profile of an investor, like your ideal investor? Yeah. How would it look like?
We are going for VCs.
VCs.
Yes.
Okay.
Yes.
And obviously somebody who a VC that understands this platform.
B2B. So for us, of course, it's preferable that this VC would understand fintech and B2B sales, because it's totally different. What we saw, more VCs understand B2C. Okay. And less VCs understand B2B and how it's done. Of course, SaaS. So B2B SaaS, this is where we are. And this is our favorite or the most wonderful investor for us. Yeah.
What does the future look like for you? Scaling it's just
so
going.
right now I can also tell we are enjoying our growth. We just do not enjoy that we can grow much faster.
Yeah.
And we can increase much more our conversion rates with product already polished and proven. So what we need to scale and grow. But we see in the future what we also see as the trend. So this is the year when we automate, and the next year we automate online lenders. So previous year we automated fintechs. This year we automate banks that onboard. For example, according to American Bankers Association review this February, 70% of banks inside the United States do not have digital lending solution. Of course, these are all smaller and medium sized. Big ones already have all. But almost 40% of them planning to buy it within the next 24, 36 months. So this is where banks coming in. But after 2-3 years, there will be in-house financing. So what we have now, like jewelry shop, furniture shops in the United States, or plastic surgery hospitals, they actually name it lending, but actually these are payment in installment. And they need a turnkey solution that will manage everything, calculate scores and notifications, calculate correctly portfolio management. But this is the next wave. You ask it for the future. So after 2-3 years, this is the wave that we will serve, because we are by the nature turnkey solution. What will be required for majority of them?
Potentially all the retail shops and all the platforms out there. So I could go the whole day just talking about fintech, SaaS platform. I have so many questions, but unfortunately, due to the limitation of time, I have one more question for you. So if our listeners and people who qualify to be hired, or investors who would like to find out more about Turnkey Lender, how do they reach you? So by my phone. By your phone number,
or by our websites, and request by my email, by my phone number. So my number is H696 6325. You're welcome to call anytime.
Sure. And your email?
I need to spell it D. VORONENKO @turnkey.lender.com.
Fantastic. And they can find that on your website as
well.
Great. Well, it's been an absolutely pleasure talking to you, Dmitry, and I hope to find out more. And please come back to the show. I have more questions to ask you about. How it's 6 months down the road. How are you gonna progress, and whether you're gonna show up in another magazine?
And thank you very much for the great questions. I enjoyed the conversation. Thank you.
Thank you so much, Dmitry. And this is a wrap. This is the Asian Tech